Hello guys, today is the 26th of December 2025 and of course I wish everyone a happy Boxing Day. I hope you're boxing somebody. If you're not boxing anyone, let's box the markets. Alright, so today we're starting with our volatility 75 and of course it's still the holiday but then we can still trade on our synthetic markets. So just be marking out the recent highs, the recent lows, and of course this is the high that led to all these major bearish move, and then here is the recent low that actually the market built up. So internally you can see this, you can see a day trade bullish trend. So let's mark out the next structure. This already was taken out, so this is the next one. So this is where our focus is going to be right now. So what you want to see is actually pretty simple, nothing complicated right here. You want to see a breakout above the day, test of the day. You want the market to actually get to that level, that simple. But then if that does not happen, you want to wait for a change of structure under this before you can go on the bearish side next to this target. But then see the market is already on the bullish side. Let's see what really happens. That will tell us. So let's go to the 15 minutes chart to confirm what you're looking at. Are we looking at the bullish side breaking above this, or we are thinking about breaking below that? Okay, you can see, I think currently you can see with this low momentum bearish candle, they're followed by this bearish candlestick. I think this is actually telling us a good sign that the market is actually likely to break above this for us to go long on this market. So let's still wait and see what's going to happen in the next few minutes or hours. That's it. Let's go to 75 1 seconds. Okay, just as a reminder, if you don't know this broker, they actually Deriv, and of course they are more of they have synthetic market. They actually have the FOREX market. You can trade cryptos, you can trade indices. They have a lot you can trade. Even stocks, you can take stocks with them. So these actually their what's it called? Their synthetics available on weekends or public holidays. No break and nothing like fundamental, just pure technicals, and then you're good to go. So if that sounds interesting, just check the link in the description. If you don't have an account with them, you can actually open an account with the description with the link there, and of course using that link automatically gives you access to all my trade. You can see all trades I've taken and the ones I'm currently trading and the ones I've been taking within the public holidays. Remember, I might not really drop all my entries here, so sometimes you can just go there to see trades I take on daily basis. Okay, I don't think there's much to explain around here. You can see it's already very much obvious. So this is the recent high that led to this bearish move. Now this is the low the market currently formed. So we expect, and since that's been on the bearish side for today, so it's likely to continue on this bearish side. But that's, we can only confirm that if you can see below this previous low around the test of that for us to go short on this market. Otherwise, if you're going back to the long side, I want to see a change of structure, more like taking out this previous internal high. You can take out this previous internal high, then maybe you can think of going long with that. But for me, I'm currently still very much bullish and looking up for bullish movements on this. So I said bearish, not bullish, sorry, bearish movement on this current trade. That's it. Let's go to the boom indices, and of course, we'll be starting with the boom 500. So going to H4, okay, it's already on H4, so just marking the recent high. This is the high that actually led to this current bearish move, and then currently, and of course, this is the next low the market is likely to get to. Now, for me, this what you want to see is a continuation of that bearish move. But we can only talk about that on the 15-minute chart. If you see the market breaking below a level, is currently couldn't go below, and currently around this level, I think this is where we should be looking at. So that means we want to see the market getting rejected first, then breaking below this, then want to go long short on this to this next level. So let's see if that can happen. Remember, it has to get rejected. We want to see something like this rejection around this level. So now not just if that, and if it happens that it just continue moving on the bearish side. Remember, this is boom, meaning that it hits 6. So if it just continue moving, that means we're entering that your stop loss to be above this rejection sign, then this will be a take profit. Before me, I think I prefer it on the rejection side. Okay, that's it. Let's go to 1000 index. Okay, on 1000 index, still we're going to be starting with H4. I think it's kind of similar to that of 500. So here is the recent high, the recent low. Just like I said, it's somehow similar. And here is the zone the market seems to be expecting right now. So there's a lot of basket there, but then since this market is on the bearish side, we still expect it to still continue on the bearish side. Here we see a change of structure, so that means since it's already broke this, retest this, and currently getting rejected. So let's see if the bearish candle can actually go below this level, and if we can get below this, they can think of shorting this to this next level. So let's see what really happens if that holds. Then we're going short on this. So going to the crash index, of course, that's a crash 500. I don't think it's actually very much complicated. I think it's actually very much simplified already. It just was just market structures. Okay, I think crash 500 to be on the bullish side for a long time. So let's see if we can see opportunity to join on the bullish side. Actually, the one actually took yesterday that has been very much profitable. That actually is closed already. I've taken profit on that, and so they have not really checked the chart because I've been a bit busy. Maybe it's holiday, everyone is busy. From January we've been busy with some stuff of looking for this. Now it's time for us to get busy spending what we look for. I'm sure you understand what I mean by that. Okay, on this, I don't think I've taken any trade. No. It's not really looking. I'm not comfortable with the structure, so I'll just leave this and look for something nice. Okay, so going to 1,000, going to be the last for synthetic, of course, for Deriv. The next to be checking out is going to be on well trade, and that will be dropped after now. Okay, still we're gonna go to the H4. Okay, here's the H4. So marking up the recent high that led to this old low, then the low. I think this is kind of similar to that of I think this is 1,000, right? Yeah, kind of similar to that of 1,000 because already on the bearish side. So let's see if this market actually take out or something around there. Then just target this. But then if this get broken, they might also think of still going short on that. But then let's go to 15 minutes and let's see what is going on there. If you have opportunity of breaking below this. Not yet. Because if you want to take the damage, your stop loss is going to be somewhere which is then a bit wide compared to this of take profit. So just to wait for the market to actually get below this, then trying to move above and getting rejected, I think of going short after the bearish candlestick. That's it. That's going to be the end of today's analysis on day trade on Deriv synthetic analysis. So please remember, don't risk more than you can afford to lose. Nothing is guaranteed. Nothing is 100% guaranteed. So please make sure you only risk what you can afford to lose. That said, I wish everyone a profitable day trade ahead. And of course, please do enjoy yourself and have a lovely holiday. Bye for now, and of course, see you in the next video.